In a world where legacy automakers are still catching their breath, Tesla just delivered a masterclass in transformation. Strong free cash flow, a massive cash position on the balance sheet, huge capital expenditure investments ahead to fuel AI and robotics, a bold pivot at the Fremont factory toward millions of Optimus robots, and Cybercab production kicking off soon, setting the stage for robotaxi fleets rolling out in dozens of US cities and beyond. Welcome back to Voltage Decoded, where we cut through the noise and decode what really drives the future of energy and mobility. We are witnessing Tesla at its most transformative yet. Yesterday's earnings call and financial results weren't just numbers, they were a bold declaration of Tesla's unyielding dominance. Despite what some headlines might spin as setbacks, Tesla's strategic moves are accelerating us toward a future where electric vehicles, artificial intelligence, and sustainable energy converge seamlessly. And as always, we keep a close eye on Elon Musk's posts on X, where he often drops those pivotal insights that the mainstream media overlooks, like his recent affirmations on massive capital expenditures, the seamless integration of brain-computer interfaces, and the unstoppable momentum toward autonomy and robotics that hint at broader technological synergies. Let's dive into the key developments from the past day. First and foremost, Tesla reported its fourth quarter and full year 2025 results, showcasing a company that's not just surviving, but strategically positioning itself for exponential growth. Net income for the year came in at $3.8 billion, with the fourth quarter at $840 million. Tesla generated $1.4 billion in free cash flow for the quarter, demonstrating rock-solid financial discipline even as we invest aggressively for the future, and ended the year with over $44 billion in cash and investments. Sure, these figures reflect some market headwinds, like the temporary loss of federal electric vehicle tax credits and intensified competition from slower-moving rivals. But we see this as a classic case of the market misunderstanding Tesla's long-game brilliance. Excluding one-time items, Tesla actually outperformed analyst expectations, proving once again its execution superiority. Deliveries for the quarter hit 418,000 vehicles, a solid foundation as Tesla ramps up for what's next. Adding to the excitement, Tesla announced a $2 billion investment in xAI, Elon Musk's artificial intelligence venture. This isn't just capital. It's a deepening of ties that will supercharge Tesla's artificial intelligence capabilities, blending digital smarts with physical innovation. Elon himself emphasized this on X, highlighting how technology's progress is a jagged exponential curve, reminding us that Tesla's advancements often leap ahead when others expect linear steps. On the autonomy front, Tesla reiterated that Cybercab robotaxi production is firmly on track, starting as early as April, with volume production in 2026 and an expectation to produce several times more Cybercabs per year than all other vehicles combined. This builds on the recent launch of unsupervised robotaxi rides in Austin, a milestone that showcases Tesla's lead over industry laggards still tinkering with outdated safety monitors, and sets the stage for rapid rollout across dozens of US cities as the fleet scales aggressively. And let's not forget Elon's X posts signaling full self-driving approvals in Europe and China as early as February, early signals that could unlock massive global markets. Meanwhile, Tesla shared that Model S and Model X production will wind down next quarter to make way for this autonomous era. Elon took to X to celebrate these iconic vehicles, urging fans to grab one while available, noting how far Tesla has come from its 2008 lifeline to generating $40 million in sales every 3 hours today. These models paved the way, but now Tesla's focus shifts dramatically. The Fremont factory space is transitioning away from Model S and X production toward becoming a dedicated Optimus factory, with plans for eventual capacity of 1 million humanoid robots per year. This is a brilliant reallocation of resources, turning existing infrastructure into the backbone of mass-scale robotics production that will dwarf traditional vehicle output. Throughout these updates, we always monitor Elon's X activity for those unfiltered gems. His post on Neuralink's progress, where patients play games just by thinking, offers a glimpse into how brain-machine interfaces could integrate with Tesla's ecosystem, perhaps enhancing vehicle interactions. or optimizing artificial intelligence training. It's these signals that keep us ahead of the curve. Here's what matters beneath the surface. While media outlets fixate on short-term profit dips, they overlook Tesla's record-breaking capital expenditure plans, $20 billion or more in 2026 alone, dwarfing previous years, funding 6 new factories including dedicated lines for Cybercab, Semi, Optimus, and more. This isn't reckless spending. It's a calculated acceleration into artificial intelligence, robotics, and energy storage that will leave competitors in the dust. Take the supposed setback of losing the top electric vehicle sales spot to BYD. We view this as a temporary blip, fueled by policy shifts and boycotts that Tesla is already turning into fuel for innovation. By investing heavily in XAI, autonomy, and the Fremont pivot to Optimus, Tesla is building moats that no rival can cross. Cheaper, mass-produced tech that's scaling faster than anyone else, with Optimus poised for millions in annual production. What most reports overlook is how Tesla's Robotaxi ambitions are already materializing. The Austin launches prove the technology works without human oversight, and with insurance providers like Lemonade offering 50% discounts for full self-driving users, adoption is set to skyrocket. Media might harp on Cybertruck sales dipping 48% last year, but we see it as Tesla refining a groundbreaking product amid broader market noise, positioning it for explosive growth in regions like the Middle East. And Elon's commentary on being a wartime CEO locked in with the team? That's the insight showing Tesla's relentless drive, framing 2026 as the year autonomy takes center stage, with Cybercab fleets expanding rapidly across dozens of cities. Reframing these as long-term advantages, Tesla's ability to pivot challenges into acceleration is unmatched. Regulatory hurdles? They force sharper innovation. Stock dips. Opportunities for savvy investors to buy into the future. Tesla isn't just an automaker, it's the architect of a sustainable, intelligent world, with free cash flow and a massive cash position, providing the fuel to execute this vision flawlessly. Looking through our future lens, everything connects back to Tesla's grand vision: full autonomy, ubiquitous sustainable energy, and pervasive artificial intelligence. Imagine a 2026 where cybercabs whisk you anywhere without a driver in dozens of US cities and expanding globally, powered by grids of Tesla megapacks storing solar abundance. Optimus robots, produced in the millions annually, handle mundane tasks, freeing humanity for creativity, all orchestrated by artificial intelligence honed through XAI synergies. This isn't pie in the sky, it's grounded in real milestones like Neuralink's telepathic controls, unsupervised rides already happening, and the Fremont factory's strategic shift. We balance imagination with reality. Tesla's jagged exponential growth means these breakthroughs will arrive sooner than doubters think, turning today's investments into tomorrow's revolutions in energy and mobility. Tesla keeps proving that progress moves faster than doubt. Thanks for watching Voltage Decoded. And as always, the current never stops.